Hey, good morning, everybody. Morning, David. Morning, Michael. Morning, Jason. Morning, Dan. Al, Kimberly. Glad to have you back with us. Valerie, good morning. Good morning. Good morning. Um, Need to stop something there. And yeah, glad to have everybody. If you want to chat with us, make sure that you're a subscriber. Click the subscribe button. A few seconds later, you'll be able to chat right on the live stream. And if you're not seeing the live chat, maybe try a different browser like Google Chrome, maybe the YouTube app. Just depends on your device's situation you have going on. And I see it and it works just fine. I've got lots of people chatting. So if you're having trouble connecting to the chat, try a different browser. That's my solution. And welcome. And while you're at it, if you want to hit the alert with the things and hit all alerts, you'll get notified every time I go live. If YouTube thinks you want to know about it, apparently. So hit that button and it's more likely you'll get notified when I go live. And I do this every morning about 9:10-ish. And then on Tuesdays, I typically do 30 minutes of awesome where I do your request for 30 minutes straight. That's usually 5 p.m. on Tuesdays. And then we carry the conversation into Discord. And if you want that, check the link in the description below me. And let's get started. So, all trading involves a substantial risk of loss. Don't trade with money you can't afford to lose, please. Please, please. Past performance is not necessarily indicative of future results. I may never get anything right again. I may be completely full of crap from here on out. And this presentation is intended to be informational, educational, and fun. It is not a recommendation to be for any kind of buying or selling of any financial instruments or anything else. If you desire that personal financial advice, consult your financial advisor. You got to hire them, so they have a fiduciary duty to give you advice based on your financial situation. Morning, T. Brand. Morning, Pat. Morning, Workman Smith. Morning. Hey, everybody. So, coming up at 10 a.m. That is about 45 minutes. Yeah, about an hour, about 45 minutes, really. At this point, we have the University of Michigan Consumer Sentiment coming up. And if I was on should be the correct one. Where are we? There it is, right there. See this right here, Consumer Sentiment. We're expecting a 63, a little bit lighter. We'll see what we get. I don't know. Are you feeling? How's your consumer sentiment? You feeling strong? Are you feeling kind of weak? You can let me know in the chat. There for a long time we were hanging out near the hundreds, and after COVID, the consumer has not felt very strong, even though prices have been blasting higher. So consumer sentiment bottomed out right back here in June, consistent with the not a recession having taken place. We're on the upswing. I don't know. I mean, prices are going higher. Inflation is going to be here to stay. We're not doing away with inflation. So, are you feeling strong, my friends? You can comment. But we haven't really done this in a while. We have to go all the way back here. I mean, back right here in June, we were lower. June and July, we were lower than all the way back here, even during the housing bust. I mean, we can keep on pulling this back. That goes back to 2005. That was the lowest level we've seen almost 20 years. Now we're coming back up out. Typically when we come back up out, we return back up in the 70s, 80s. We had another dip right here in 2011 and then came right back up. Had a really good, prosperous, bullish kind of run. And then kind of dipped and then dipped further. And the consumer just not been very, very confident lately in a relative sense compared to what we've seen for years and years. This is why everybody feels so bad. We're down here in the bottom. Like we're in the pits. Like everybody thinks this is bad. That's your consumer sentiment. We're all consumers, right? So you still got to buy what you need to buy, but we're very bearish and not very optimistic is the feeling I get. So, but usually we bottom out and start turning the bottom before things start getting better. So this happens in the charts. It happens in, the sentiment and stuff like that. This is, if you think about it one way, consumer sentiment is what I kind of trade on. Like sentiment, the untangible sentiment of the market is what technical analysis really is all about. Because we say one thing, we have stories on the mainstream media, but what we actually do, what we actually trade, and what actually shows up in the price, that's actually how we feel. All right. So it looks like to me that was the recession, and it was worse than back here in 2007 and 8. A steeper decline really bummed us out, and now we're actually kind of turning the corner here. So forecast to be 63. We'll see what it actually hits here in about 40 minutes or so. We'll see what we actually get. And now, what do I expect that to do to the markets? Well, let's pop over and look. Let's take a look at S&P. Just kind of hovering. We have not been able to break out. This can lead to a dip down to 4,000 or a breakout to 4,300. We're still in that coin flip zone. We have not been able to break the February highs. We have not been able to push through the support. And we kind of have this support line that, if you look right here, it's kind of formed a support, right? We came up, head and shoulders it, did a dip, came up, found a little resistance, popped up, came back, tested again, down, break above, come back, test it from the top, test it from the top. If that continues to hold, we're probably going up to 4,300. Now, why 4,300? Well, that's where we topped out back here in August. All right, we're going to go test that, and that's going to be significant resistance to going higher. Now, the one thing I caution, and I've said this for several days, several weeks now, it feels like, if we just bust right on through 4,300, go up to 4,500, that is dangerous. That is super dangerous. The market can roll over and make a lower low than we saw back here in October if we just bust right on through 4,300. Don't even hiccup and go up to 4,500. So please keep that in mind, that can lead to a bigger down, and that would be kind of scary. All right. My primary expectation is either this retrace or this direct breakout and go test this 4,300 area. And once we do that, the most likely path is probably going to be a pullback like this. All right, it's gonna frustrate a lot of people, gonna spook a lot of investors, but that's gonna be healthy. That's gonna shake out a lot of weak hands and allow us to potentially go higher from there, as long as we hold that support. So that's the path forward that I see most likely. As far as the reaction today, not so sure. This is not looking super bullish the last few days here. And we look at the S5FI, we're just continuing to churn sideways. No conviction really from the S&P 500. And that's why if you've been on here this week, I've been kind of harping on the NASDAQ, because the pattern has been much more clear. This is just kind of a sideways hot mess of price action on S&P 500. This is ES. This is S&P 500's futures. If you're unfamiliar, that's like the SPY, the SPX, all that stuff is related to the ES. ES trades 23 hours a day, 5 days a week. We're only closed basically on Saturday. We open up on Sunday evenings and trade till Friday afternoon, which is today. So the price action provides the more complete picture than what we see on SPX or even SPY. So right there, we're just kind of churning lots of little candle bodies, another consolidation. We did that right back here, and then we popped, and then we dropped, then we popped again. This led to volatility. When we churned sideways right over here, it led to some volatility. Churn it again, probably going to lead to more volatility. And that volatility can come today on that consumer sentiment number. ES, though, this is why I've been harping on ES. NQ, this is NASDAQ's futures. If you're unfamiliar, like QQQ, SQQQ, TQQQ, NDX, all the NASDAQ-derived tickers and ETFs. This is the futures, NASDAQ 100, the E-mini futures. There is a micro futures also. But This picture is rather clear. It's rather bullish. We're higher. We're pushing highs, consistently pushing highs. We're probably going to go up here and retest this area. I've been putting on positions for this retest. We're probably going to go up here and pop up and test this 13,700 area where we topped out back in August again. Now, so goes Apple, so goes the S&P usually. Apple and Microsoft making up like 20-something percent of the S&P 500. I think, the numbers keep getting crazy, so it's hard to keep up the exact figure, but I think Apple's roughly 15%, and then Microsoft's another 10-ish percent. Between those two, whichever way they're going, the S&P is likely to go. The big force, like the ocean, rising tide, floats all boats. So goes those two super mega large mega cap companies. So goes most of the market. It's something to keep an eye on. Now, talking about the smaller companies, the small caps, and especially talking about the banks, the regional banks, we have kind of this head and shoulders pattern going on the Russell. If we start breaking down below the neckline, maybe, right, JT, I can't see that quite. Let's draw it on here just so you can see what I'm talking about here. We have this potential head and shoulders right here. We start breaking down below that neckline, we can easily push on down. And at this point, this could be a much bigger down in the small caps. Typically, a head and shoulders pattern will push something like that from the neckline. We could get down in the 1400s. Now this also gives me caution because small caps tend to lead the market. All right, when things are bad and looking bad, small caps tend to lead the market, both down in bad times and up in good times, and they tend to turn the bottom before the bigger mega caps, the mid caps even. They're small and nimble and they can make adjustments, and they tend to turn before. So this is a threat out there, but at the same time, we could do a head and shoulders rejection pattern, which looks something like this, and it could lead us to a pop, and we could go right back up here to this prior resistance, these prior highs, right around 2,000, up possibly 2,100. Now that could lead to a bearish rollover, so I'm cautious. I think that would get an extension on up here to about 2,300 if we did go the head and shoulders rejection pathway. Now we did try to break down right there and we rejected right back up, but we're still consolidating sideways at the lows that we've kind of established. We're not making a lower low than what we made back in October, but we're still hovering just above those lows. That does give me caution that we could see a larger breakdown. That's one thing to keep an eye on right there, the Russell. All right. And you might, JT, how do I keep track of that on a normal stock chart? That's IWM is the ETF for that, or RUT is the index, RUT. All right. Oil still kind of churning here. Do expect it to push lower, retest this area right down here around 67, and possibly break down further if that support doesn't hold. May get an extension lower. This has been quite a bearish move for oil for the last year and a half or so. Quite bearish, almost, I think we can get an extension lower. And we peaked out back here March 22, so I guess year and 2 months, 14, almost 15 months. We could definitely see this push lower. 59 would be the first extension target, then we could see it push on down to 52. I know a lot of people aren't expecting oil to drop out like that, so could surprise a lot of people. I've heard a lot of people beating on the drum saying oil's super bearish or super bullish. I don't think it is right now. We haven't made the bottom. It doesn't look like to me. Gold expecting a pullback, a deeper pullback. Despite the strength of this rally, we did stop right at some extensions and start pulling back. I think my pattern says that typically we can expect a deeper pullback to the roadmap line before we get extensions. It's going to be more work to go higher than it is to go lower at this point on gold. Bitcoin probably going to come down and touch the daily roadmap line down here around 25,000, 24,500, possibly as low as 24. I mean, it can always push lower, but that 24, 25 area probably going to get a retest in the next few days. DXY pushing higher again, but just churning in this area. Managed to find some support at this low we made back here in February. I still see it highly likely to break down and push on down into the 90s. It just seems like the highly likely path for the dollar. Now, stuff that's actually moving today, FSLR, nice pop, bounce right off the roadmap line. That's going to be a long type entry. Let's update some fibs here. Probably looking, breaking above this area right around 205. Sets it up for 234, possibly 252. That's not today. For targets, that's, this is a kind of a swing trade type situation, but this is something that could be moving. And as we saw on other stuff, this can happen very, very quickly. Like Uber over here started blasting up almost to the target right there. So this kind of pattern, same kind of pattern that we're seeing on FSLR right here. All right, that'll be the confirmation, kind of the conservative type entry. There was no real aggressive. We gapped down and then gapped right back up. So this thing can launch right out up to that 234 area is what it looks like. Now, it could turn down, so this is something you can watch for. This area right in here, let me just remove this right there. That consolidation is kind of resistance. So we could turn down out of here, right in here. There'll be resistance. If we turn down out of there, we can make a lower low or come back and retest the roadmap line one more time. So that's why it's a cautionary tale. If we don't get that close, the daily close up above 205, then we could see it roll down one more time. So be careful. This is not just a like go bullish right now type of play. So, wow, look at that one. Bluebird. Is that the bus? Yeah, they made buses. Who here's ridden on a Bluebird bus? Look at that, right up to the target, 26. That's probably resistance. We could get up to 26, but the higher we climb the fib ladder, the more likely it is to retrace before we can go higher still. So that's what we got there. Tesla showing up. This is moving on old Elon, tweeting that he has found a potential CEO for Twitter, and everybody getting super excited that Elon may come save the day for Tesla. I don't know, save the day from what, but seems to be the hype. We've got resistance right up here. I kind of drew this pattern way before I knew any CEO news or anything like that we would come down here, retest the oval, potentially break right on through the roadmap line. We do have resistance off those two lower highs. Well, one lower high. We'll have resistance to get through, and it's looking like it's going to come right at the roadmap line. Then we have resistance from this bigger downtrend line coming up in Tesla. But that's a pretty good move up from 170 up here to about 250. So we start breaking through this 196 area, we could definitely see a bigger up, and it's probably not going to be as fast as I have drawn right here. It's probably going to take a little longer, maybe out to June, possibly July, to get up into that area, up around that 240, 250 area. We start breaking up through that, and then that can be very positive, but I do expect a resistance and a retrace before we can break on through. That's very similar to what happened on the S&P 500. If we go look over here, see we bounced right off that long-term downtrend, pulled back, busted up through, came back, retested it again, and then we've moved up away. That's kind of a bullish breakthrough pattern. That's a reversal of trend. You know, despite everybody banging the drum, this is a bear market. We've actually broken the bear downtrend on the S&P. That's why I'm slanted bullish, while many of my peers are not. But I am cautious that we could get a rollover after this move. You know, some people say bear market rally. Well, it could be, but we broke the downtrend, and this definitely looks like, you know, this was a bear market rally right there, up the resistance and right back down to a lower low. This one has been a choppy, hot mess, trying to fight everybody's, you know, bias that we're going down again. This is where, you know, reversals are formed here, and we can break out and go higher and push a higher high, and then go down in a massive 10-year depression that scares the crap out of everybody. So just know this stuff might be coming down the pipe. Those little offhanded comments, that's the things Goose loves, but he's working for the next 6 days. Race, Ferrari. Oh, let's go. Let's put that back where it was and go back over here. Race. Yeah, keeps hitting targets. Next one up around 310 probably. You can see it keeps pushing up, retrace, pushing up, retrace, pushing up. 310 will be the next one. At some point, it's going to make a bigger retrace all the way down to the roadmap line. Be careful. It does it over and over. You can see, retrace, push up, 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 retrace. It's going to happen some point up in here, maybe at 310. That will be the next upside resistance. SPRY. Nice pop right back to the roadmap line. Nothing to do. Market is open. LUNR just looks like a scary, bubbly, yeah, that's bubbles for you. Exponential up, exponential right back down, and nothing. I wouldn't expect much out of Lunar. Just wouldn't. AMLX, also not expecting a whole lot. Looks like going lower. That's pharmaceuticals are not the easiest. Don't always follow the pattern that I track. IEP, that looks pretty horrible. Talk about one that fell out of bed. Whew. Made a higher low. It can recover, but that looks pretty bad. Doesn't look super good for going higher. And that was in a big wedge pattern. This is exactly what I would expect out of a wedge pattern. It's watermelon seed squeeze. That's what I call those. We haven't seen a lot of them. Ford is in one too. Watermelon seed squeeze, you don't know if they're going to pop or drop. That's the problem. Just like when you squeeze a watermelon seed in between your fingers, they pop. You never know which way they're going to go. This little tightening wedge thing, they can pop, they can drop, they can do other crazy stuff. But that one dropped, and got to look for it to build a support base here and start moving higher. At this point, resistance moving higher is going to be right here where we've topped out 4 or 5 days right there. So back up of 40 is probably the initial indication we may rally right back up to where we were at 50. Other than that, I would expect lower. Cold, it's ultra short natural gas, still churning. Natural gas still looking like it's going to push lower. DXJ, Wisdom Tree Japan Hedge Fund. That one looks like it's going to the moon. Let's see what the resistance might look like. Yeah, probably 75 and then 77 above that. DRMA looks pretty horrible. I would not put my money on that at all. FAS has a long-term big potential to go up, but still working on the bottom here with the financials and could push lower due to banks blowing up. That banking situation is still not resolved, still not going to be fixed, probably for maybe up to a year or longer before we see banks consolidate and shake out. Here in the U.S., we have over 4,000 banks. Most other countries, even large countries, only have 200 or 300 banks. So we have a lot of room for up to 90% of our banking industry to consolidate here in the U.S. just to be in parity with the rest of the world. You might say, hey, JT, we're the financial capital of the world, and things are different here in the U.S. That's true, but it's kind of like cryptos. Do we have room for 23,000 cryptos or whatever we're up to? Not so sure. 24,000 looks like today. 24,000 cryptos. Do we have room for 24,000? I don't think so. Maybe 100, maybe, possibly. I think most of those, probably 95, 99% of those are probably going to go away or go to zero at some point. So be careful chasing after all those small meme coins. All right. Surge. Surge is surging. That's a nice little play there. Nice little pop. Hitting some resistance. I would expect it to probably find resistance either at 5 or 6 and come back, retest the roadmap line. Turning up, breaking above that high can lead to a retest of these highs over here. Low price stuff also not always follows the patterns. And along with leverage stuff like the Ultra Dow here, not really looking bullish on Ultra Dow. But that doesn't mean that it won't suddenly break out and go higher. It's kind of a big, large scale watermelon seed squeeze type play. We get to the end over here, it can pop up or pop down big. DEO, and look, taking a nosedive. That's a crappy looking chart. Don't chase crappy looking charts. MSTR, getting a retrace on Bitcoin being weak. Probably going to retrace back to the room up line. Baidu, also getting slammed a little bit this morning, pre-market, off that high, just trying to make a base here. This could be the base before we go higher, but it also could be a base before we break down and go even lower. Be careful. Doesn't have to do anything. If I was betting on it, we may get a little pop to 129 and a push lower on down the fib ladder here. We do have a support kind of hanging out right there at the 618 where we made lows before. Would not surprise me to see this kind of do this, and then this, and then this. Breaking above the roadmap line would be my indication that we may rally right back up to retest these highs that we've made in February and March. YINN, China 3X bull, is not looking very bullish, kind of looking bearish, and that's kind of goes with the story of Baidu. That's not a bullish looking chart. Not right now. I mean, that was a big down. No, we could go up possibly even as high as 140 and then roll on down. That's a rough looking pattern right there. Not my favorite for going long off of. AU, look like that one's coming back to the roadmap line. Back before, when we were over here, I speculated that we may see a retrace back in this area, and we're almost there. And then SP&T, no idea what that company. Casualty insurance, getting a slam, holding support. We can go higher off of that, but we can also come down and retest the roadmap line. All right, it's kind of the list for the day. Not a ton of movers. Remember, consumer sentiment coming up here in about 20 minutes. So be careful. I'm not really looking to get into any trades before that news hits. I think it can be a volatility leading event. My bias for the day is still sideways. We're still stuck in this range that we've been in, gosh, since early April. My bias keeps being sideways. Well, that's, what we got on the S&P 500. I am bullish on NASDAQ. Looking for that 13,700 test. All right. Come back on Monday, see what I got to say as we go through the markets and what's moving on Monday. We got more earnings, more stuff, more news to digest from the weekend, more events. Come back and see us. Make sure you're subscribed. Make sure you hit the alert with the bell and the notifications. Turn them all on if you want to get notified when I go live again on Monday. Otherwise, if you want to come join us in Discord and continue the conversation all day, links in the description. And I'll see you again Monday. Bye for now.